I just bought $100,000, 6,300 shares of Oscar Health, ticker symbol OSCR. In this video, I'm going to go through why I just bought $100,000 worth of Oscar. We're going to be going through my high five snapshot, which goes over all the fundamentals of the company, all condensed into one easy to read and easy to understand, where to buy, when to sell, fundamental analysis spreadsheet, essentially. We're also going to be going through what Oscar is, who they are, and what they do. And then we're going to get in a little bit of the technicals at the end of the video. So stick around for that. If you like these types of trading and where trading meets fundamental content, definitely give this a like. Definitely give me a subscribe, a follow. And definitely let me know down in the comments if you really appreciated this type of video. That way I know to make more of these in the future. So without further ado, let's get into it. So I just ran Oscar through my high five snapshot. And honestly, what I found was absolutely mind blowing. And I've never had a stock tell me it's such a screaming buy since HIMS at $18, when my spreadsheet and my snapshot was telling me that it was actually the fair valuation was $55 when we were at $18. What Oscar just told me is actually even bigger, and the gains can be even larger. I'm talking about a 10x opportunity for this company that is $15 per share. Absolutely massive. So stick around. We're about to get into that. But let's talk about what Oscar Health actually is and what they do. So they're a healthcare technology company that makes waves in the industry. Their mission is to make healthcare more accessible and affordable to everyone. Oscar Health offers a variety of healthcare insurance plans for individuals, families, and businesses. They focus on providing high quality care through a unique combination of telemedicine, healthcare focused technology, and transparent claims pricing systems. Their services include virtual care, which means you can consult with doctors from the comfort of your home. Plus, they have a supportive care team that's always ready to help you navigate your healthcare needs. Oscar Health also offers affordable prescription medications, ensuring you get the best care without breaking the bank. They operate in multiple states across the United States, making their services accessible to a wide range of people. Now, here's where it gets really interesting. Michael Burry, the long investor, Knotts, and a bunch of other people on FinTwit have been talking about this stock, calling it out, and actually shedding light on it. And that's where I actually first saw it, was from a post from Knotts. And I commented, I told him, shout out to Knotts if you don't follow him, the bull trader, definitely a great follow there. And yeah, he called it out, and I just, I was like, well, I read his DD, and I was like, you know what, I got to take a look at this. So I posted my technical analysis on it a couple days ago, and I told him I was going to dig into it over the weekend, and that's what I did this weekend, going through my DD, punching it through my high five snapshot. And again, what I found was just actually astronomical. But these investors see the potential in Oscar's health innovative approach to healthcare, and their impressive growth trajectory, and just the absolutely massive undervaluation that's going on with this company. I haven't seen something like this in a very, very, very long time. But that's not all either. So Oscar Health recently struck a deal with OpenAI as well to integrate advanced AI capabilities into their operations, which is honestly massive, bringing AI into their systems. Obviously, this partnership is set to revolutionize how they handle clinical documentation, claims processing, patient care, making their services even more efficient and effective. They're going to be able to cut down on their they're going to be able to cut down on their employees, driving that bottom line, and also driving up the free cash flow that's already getting really, really nice right now. And also, they just flipped to profitability as a company, and they're actually supposed to jump from 10 cents EPS this year for 2024 to 76 cents in 2025, which is actually a phenomenal, amazing jump of like 660 some percent. Crazy. And I'm guessing that's all going to be driven by that bottom line that we talked about, the partnership with OpenAI, cutting down on as many employees as possible to really drive that bottom line and have a strong EPS growth and just a strong bottom line number as they continue to grow their business. So, with all that being said, now let's actually jump into my high five snapshot. And I really want you to kind of just focus where I'm highlighting here with my little healthcare sign here, as you can see. So, just walking you through the basics here. We have a free cash flow margin rate. We have a free cash flow margin rate for the first 5 years and then the last 10 years. This is a 10-year analysis. And essentially, this is basically a discounted cash flow model, which is Warren Buffett's favorite tool for valuing a company. So I honestly believe if he knew about this company, Warren Buffett would probably be invested in this company, to be totally honest, because based on his DCF model, it is a absolutely screaming buy. We're talking about this stock being at about $16 per share. I'm getting $132 fair value, ladies and gentlemen. $132. It's an 88% margin of safety right now. That's with a terminal value of 10. So meaning what they're making in free cash flow, they're only getting a terminal value of 10, which is actually crazy because right now they're actually getting anywhere between 10 and 20. And this company, if we look over here on the revenue growth, they're expected to grow in the high teens, for the mid to high teens for the next 10 years. A company growing that much in this space, it doesn't deserve a 10 multiple cash flow terminal. They deserve at least a 20, I would say. At least a 20 terminal cash flow model, at least a 20. And that brings out to $208 per share. But for the sake of this video, I went through and put in the most conservative numbers because I could not believe my eyes when I saw $132. That's over a 10x from here. I just could not believe my eyes, and I just said, I just got to punch in every bad situation that could happen, right? You want me to blow your mind a little bit more, right? So $9.2 billion in revenue this company makes, and they're currently a less than $4 billion market cap. They just pulled in $1 billion in free cash flow this in 2024. They only have $100 million of stock-based compensation per year, which is absolutely phenomenal. 1/10, obviously, of what they're pulling in free cash flow wise. They have a net cash to net debt ratio of 1.2 billion to the positive side, and they only have a measly 265,900,000 shares out on the market. Now they have been diluting a little bit, but honestly, again, like if you look at this valuation, it's absolutely crazy. So a good free cash flow and forward free cash flow yield here is around 3% or more. We're getting over 23% and then 22% forward free cash flow yield on this. So essentially you're getting, for every share you buy, you're getting about 24 to 22% of that actual free cash flow for your shares. Absolutely crazy. And then the current PE is 158, which is obviously is like crazy high, but that's because they had a 10 cent EPS. But next year, like I said, a 76 EPS gives them a less than 21 forward PE, and their PEG ratio due to their growth is about 24.24. So less than 1 is obviously phenomenal. Now here's where things get really crazy. I want to show you something, and then we'll get into EPS, and then we'll get into the charts. So you see, these are all analysts' growth rates right here, as you can see right here. Look what happens if I sit here and say, okay, from 2026 to 2023, this company will grow 0% revenue. They're going to grow 0% revenue. They're just not going to bring in any new revenue at all, and they're just going to stay at $11 billion in revenue. Well, that puts this company still at an intrinsic value of $60 per share. And again, folks, we were at under $16 per share. So this is a massively undervalued company, massively. That is integrated with AI. OpenAI just landed a partnership. Michael Burry just bought in. Other super investors just bought in. And a lot of very intellectual people and great investors and traders on FinTwit are starting to really see this. And what I'm seeing here that this is a massively undervalued company, the likes that we have not seen since I don't even know when. Just a massively undervalued company here, and I just can't even believe my eyes when I'm looking at this. And again, those are like if I put in 0% revenue growth from here until for 10 years, and that's just not going to happen. Of course, if they lost revenue, say they lost 2% every single year, let's just play a crazy game. If they went down 2% every single year and then basically got back to their revenue, like a little bit higher than their revenue right now, it would still be worth $54. This is just the craziest valuation I've seen on a company. And you could see why I bought $100,000 worth today. Today. I am not waiting around. And if this thing goes lower, I will be buying more. This is the same high five snapshot spreadsheet that I use to tell me HIMS at 15 at $20 or less was actually a $55 fair value with the most conservative assumptions. And whenever I put in actual real assumptions of where they should be, it's still telling me HIMS should be over $100 per share. This is what I'm telling you today, folks. This is massive. And when people catch on, they're going to catch on quick. I mean, it's going to absolutely go ballistic in my mind. So now that we went through that, and sorry, I missed the EPS down here, but going from 10 cents to 76 cents and then growing at 660% and then growing at analyst rates here and then continuing to grow, you know, slightly and then little dips here and there. This is the fair value based on the PE. And I did a 30 PE, 25, 20, and then I did only a 10 PE from 2029 to 2034. So only a 10 price to earnings for this company, and they're still massively undervalued. You were getting 50%, 61%. You were getting massive undervaluation on this company with a 10 PE, a 10 PE. They're currently at 133 PE this year. So I forecasted a 10 going down to a 10. That's not going to happen, in my opinion. This is crazy. It's crazy on a free cash flow, discounted free cash flow model. It's crazy on a PE model. It's crazy how much revenue they're bringing in compared to their market cap. It's crazy that they're bringing $1 billion in free cash flow. They're bringing in a fourth of their market cap in free cash flow, guys. Massive, massive. They have 1.2 in net cash debt. So if you add the net cash debt plus the free cash flow, essentially in 2 years, yeah, in 2 years they would have their market cap in money. Crazy. Crazy. They could put their free cash flow for the next 2 years in a bank account and grow interest on that obviously. And then they could sit there and already have their cash here. And so it would take, 2 years essentially for them to get up to that their market cap right now. This is crazy. And you hear it in my voice. I've never seen something like this. I've never seen something so undervalued. I've never went through this and punched in, all these very crazy conservative assumptions and just seen craziness. And you think this is like the most bullish um spreadsheet ever and it's just bullish and it can never be like negative or something like that. Let me show you GitLab. Let me show you net. So if we look at net here, gotta move that. So look at this GitLab. So net, it says net is actually you're losing your current margin of safety is negative 122%. The fair value is 74 based on their free cash flow that they're doing, which is only 200 million. GitLab, same thing, negative 60%. If we look at AMD, it's okay. It's an okay buy, 10% based on their free cash flow of 2 billion. So if you're sitting there thinking like, oh my gosh, like or Palantir, it says that it's a sell right now of basically, let me see. It's a trim of 40% because the margin of risk rate here is $121. So we're at, 124. So it's saying that you should trim 40% of your position based on the valuation with the rosiest of assumptions, 30% growth, 30 PE in 10 years. So this isn't some sort of like, oh, it's only bullish. No, this is actually now you see even more why this is insane because it's telling you Palantir is in a buy, Net is in a buy, GitLab is in a buy based on a discounted free cash flow model and PE. but it's telling you here that this is a massive, massive, massive buy. That's my high five snapshot. Let's get into the charts a little bit here before we wrap this video up. Again, guys, if you appreciate this content, you appreciate this due diligence, and you appreciate the charts and the high five snapshot, and you want to see more of this content, definitely let me know in the comments. Like the video, subscribe, follow. Let me know in the comments so I can know if you guys like this kind of content, and I can keep making more of it. If no one loves it, then I'm not gonna keep making it. I'm gonna make the content that the people want, right? So I already told my whole high five trading community about this name, and already gave them my whole thesis on it and my mindset on it. Like they already got that earlier today. So just absolutely massive. So we have a cup and handle here on Oscar that's currently forming, and essentially we're forming our handle of the cup and handle, and this could take us all the way up to $45. Now remember, I told you this is 100 and you know so- 40 31 whatever it was, 100 and some 132 $132 stock fair value. So fair value means like this is what people should be paying for it, but obviously they're paying 16 bucks for it right now, and its all-time high was $37. So yeah, I totally understand. Like that's crazy, and I'm not saying that it's going to go to $132 here this year or next year. It could take some time, but I'm telling you, like you see with Hims right now, and you saw with Palantir, eventually that fair value of the company does come into play, and people start realizing very quickly that the company's not dead, or that it should be priced at this, and it's actually priced at that, and it starts this massive, massive ascent higher. So, anyways, cup and handle, we have this dip buy box from $10 up to about 13-ish dollars. If it goes down to 10, I'm buying another. I'll probably buy 100,000 or $200,000 more worth of Oscar. I mean, this is just absolutely insane. Now, the high five trading indicator is telling us this is actually a sell. It's a short essentially, and saying it's going to go down, and that's basically just the momentum. But here's the thing, it could just say, okay, yep, we're just going to come down here and just kind of consolidate until a lot of momentum is getting behind this name too. So we could just consolidate sideways a little bit before we do come back up, finish forming this handle, and then obviously we're in this uptrend here, which obviously the bottom of this bullish uptrend is about around $10 as well. So if we did go down there, we would have this support like we saw here, and then we would see it here again. But honestly, with how undervalued this is in these super investors and the retail community, I think starting early days, this is early days retail community. Not even like you saw what happened with Grab. You saw what happened with Grab. It's exploded across the internet. I think Oscar's next, honestly. Some people are talking about it, but it's not exploded across the internet like Grab did. And I think this is the next one that does that. And when that happens, for a $4 billion market cap company, you're going to see a massive move. So I'm taking that into consideration with my strategies here, that this name could get a lot of hype behind it. And you see here, we wicked off this bottom. We kind of bounced right off this support box, and we're just wicking or consolidating sideways here. And again, if we just stay here in this handle, and then we have this breakout up here at about 23 to $22 per share, which would already be a massive gain from the $100,000 of stock we bought today, would be massive. If we get that along with the launch of this volume shelf, and then kind of say that, let's just say that this right here, this previous support that was created on the Williams percentage range, that is new support. And then we come down here and we actually bounce, and then we go higher. And then we can form our Williams consolidation box. And once we form our Williams consolidation box and we continue to just truck sideways on the monthly, and our high five indicator rolls over, that's going to carry us so high. And it's just going to keep going, and staying underneath that green high five indicator while we stay in the Williams consolidation box and continue higher. So as you can see, we're not there yet on the technicals, honestly, but the fundamentals are absolutely phenomenal, absolutely mind blowing. And it's a stock that, You guys can do what you want, but you just heard me first. I bought $100,000 worth of this, and I think it's going to 10x. I truly believe that Oscar, that $100,000 that I just invested today in this company, could turn into over $1 million. So, again, if you like this type of content, if you are interested in this type of content, like, follow, subscribe, leave a comment below letting me know you like this. Leave a comment below letting me know what you're doing about Oscar. Are you sitting on the sidelines? Are you waiting for more of a dip? Or are you starting to DCA into this name? Or are you going full bore like I did with $100,000 or $10,000 or $1,000 today? Because I do believe this could 10x. I do believe it could 10x. So I appreciate all of you tuning in. If you made it to the end of the video, thank you. I love you all. I love this awesome community on X. I love all my followers. I love all my community members. If you're interested in joining an amazing community with over 60 members that are just continuously growing and becoming better and better and traders and soon to be investors, something we're working with right now. Nothing open to the public yet, but we are doing that now in the community, and we'll be opening that up later this year. But if you are interested, links in my bio. And yeah, Oscar is massive, everybody. Massive. Definitely massive. Appreciate you all, and I'll catch you in the next one.